Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. Employment data for January showed mixed signals, with non-farm payrolls adding only 143,000 jobs, a sharp decline from the 307,000 jobs added in December. However, the unemployment rate declined to 4.0% from 4.1% in December. The inflation rate for January will be released this week and is expected to increase by 2.9% year-over-year, remaining at a similar level to December. Retail sales data for January will also be released this week, with expectations of no month-over-month growth, 0.0%, a decline from the 0.4% month-over-month increase recorded in December. As of February 10, 2025, President Donald Trump announced plans to implement reciprocal tariffs on countries that impose tariffs on U.S. imports. This approach aims to match the tariffs that other nations apply to American goods. While specific details and implementation strategies are still under discussion, these measures could significantly impact international trade dynamics. China Zone. The Caixin Manufacturing PMI for January remained in the expansion phase at 50.1, slightly lower than December's reading of 50.5. Indonesia Zone. Indonesia's manufacturing PMI remained in the expansion phase at 51.9, a slight increase from 51.2 in December. Inflation in January showed a decline, rising only 0.76% year-over-year, minus 0.76% month-over-month, down from December's inflation rate of 1.57 year-over-year, 0.44% month-over-month. GDP growth reached 5.02% year-over-year in Q4, slightly above the consensus estimate of 4.98% year-over-year. Foreign exchange reserves in January increased to $156.1 billion from $155.7 billion in December. Motorbike sales continued to decline, dropping 6% year-over-year in January, compared to a 5.5% year-over-year decline in December. Upcoming data releases this week. Consumer confidence for January, which is predicted to remain in the optimistic phase at 128. Retail sales for December expected to grow 3.7% year-over-year, an increase from 0.9% year-over-year growth in November. Car sales for January. In December, car sales showed their weakest performance, dropping 6.4% year-over-year. Market view. The Jakarta Composite Index (JCI) decreased by minus 5.16% week-on-week, closing at 6,742.58. The index's decline last week was driven by concerns over the tariff increases imposed by the U.S., which raised fears of potential trade war. Additionally, on domestic front, BRI provided guidance that loan growth is expected to be around 10% in 2025, following a 20% growth in 2024. The IHSG should be able to move into positive territory this week, as it has already fallen below 7,000 level. Several domestic economic indicators, such as consumer confidence for January, are expected to provide a positive boost to the IHSG's performance this week. Foreign investors recorded a net sell of 3 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 7 trillion Indonesian rupiah. The three weakest performing sectors were energy, basic materials, and infrastructure, which declined by minus 7.60%, minus 5.49%, and minus 5.16% respectively on a weekly basis. On February 7, 2025, the yield on the 5-year benchmark government bond FR0104 declined to 6.60%. Meanwhile, the yield on the 10-year benchmark FR0103 also decreased to 6.84%. Similarly, the yield on the 15-year benchmark FR0106 fell to 7.04%, while the yield on the 20-year benchmark FR0107 declined to 7.06%. The yield on a 10-year Indon bond Indon 35 remained flat at 5.38%, while the 10-year U.S. Treasury yield fell to 4.49% compared to their levels on January 31, 2025, which were 5.38% and 4.54% respectively. Indonesia's risk premium, as reflected by the 5-year CDS, increased to 75.46 basis points. Meanwhile, the rupiah appreciated by 0.15% week-on-week, closing at 16,289 Indonesian rupiah. As of February 6, 2025, foreign ownership in the government bond market stood at 887.37 trillion Indonesian rupiah, 14.48% of the total outstanding, up from 881.29 trillion Indonesian rupiah, 14.46% of the total outstanding, on January 24, 2025. The Fed is expected to cut interest rates twice, totaling 50 basis points, in 2025, lowering the benchmark interest rate by a total of 100 basis points year-to-date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.